All right, so here's how I made about $5,000 across all of my funded accounts today. There were actually two more top steps that I have that are also funded that I just didn't take a trade on this morning because I banked in Asia last night. But let's go to the charts and see what trade we took today. Today was pretty easy, textbook. Coming into the day, we are on the 1 hour. We are rejecting out of so this candle is actually doesn't exist yet at market open. But we're rejecting out of a 1 hour bullish fair value gap right here. And we put in this London low. And then we came up to this fair value gap right here. So we actually have two levels of internal liquidity that we're kind of wedged between. And when this happens, most of the time you want to wait for the market to pick a direction, because oftentimes it will just kind of ping pong in between these two levels, inside of these two levels of internal liquidity, before it actually picks a direction and wants to go take some internal liquidity. So our bias coming into the day, definitely bullish because of this V-shaped recovery, but we want to see what the market gives us. So let's go down to the 1 minute and see kind of how we opened. What time is this? 8. We'll go 10x speed. Okay, we'll go down to 1x. Here. All right. So we're nearing market open right now. We're just waiting. We're waiting. We'll actually go 3 times speed right here. And here's what we see. We see a massive sell-off on open into this 1 hour fair value gap while taking out the external London low. Now, oftentimes this can be a Judas swing, a fake out. Some people call it the Jewish fake out, something like that. So it comes out, it sweeps it, and we create a pretty good V-shape inverse fair value gap. We actually don't take this because I don't trade before 15 minutes in the market open, because that's when the most amount of manipulation happens. So I'd like to wait, 15 minutes in, let the market die down, pick a direction, and then we look for our trade setup. But seeing this London low external swept and the inverse back up kind of puts in my mind, okay, I think we're bullish. What's our next levels of liquidity we have? We have this internal high inside of this 1 hour, and then we also have this external high up here, which is the London high that we put in from last night. So we let the market go a little more, and we actually go the 5 minute. So let's go one. Let's just go next candle. Here we go. Look right here. We have put in, one second. We've kind of we have whipped through completely that 1 hour gap. For the most part, the internal liquidity that's in there is going to be invalid. We respected it once, and then we wicked all the way through with displacement and aggression. That's what you want to see when you want to see a direction pick. So we put in this 5 minute gap right here. And so I'm framing the trade at this point. I'm saying, okay, we have swept the external London low. We have then inversed with displacement, taken out this internal high right here. What do we have left above us? We have the external London high left above us. So in my mind, okay, we take out this internal high. Let's retrace back down to this internal liquidity, which is the 5 minute fair value gap, and get an inversion out of it, because the market is wanting to go towards the next external draw. You have to understand the narrative behind what is the market wanting to do in any given moment. And when you start being able to build the narrative around what the market is wanting to do, then you can start looking for your entries and understanding why price is moving the way it's moving. So as we go a little more forwards, we start getting the retracement we want. We actually touch into this gap right here, and we put in this 1 minute gap. At this point, I'm saying, okay, we're in the 5 minute gap. We have these London highs right above us we didn't take. ES still hasn't taken them. If we get this inversion right here, this is going to be a clean textbook A+ long. And let's see. Okay, we tap back into that gap. We actually respect it. We kind of just bounce around right here for a while. And this is why you don't want to front run the gaps, because had you taken it when we had this strong green candle buying price, say, oh no, it's going to leave without us. You enter, boom, you are 50 points in drawdown. You might have got stopped out at that point. Even then, we tap the CE of it, come back down. But this entire time, what are we doing? We're respecting this 5 minute gap. Until this 5 minute gap would get flipped, I'm still looking for the external London highs to be taken. So we stay patient, sit on our hands, wait for it, and boom, right here. Oop, go back one candle. Right here, a perfect inversion. Literally could not be more of a better close. It inverses it. We get about 1-2 points past the gap. So it's not just filling the gap, taking liquidity and coming back lower. We go all the way through it, but we don't leave. Had this closed like 75, I probably would not have entered it, because then our high of day, where definitely resting orders are. This is another level of liquidity that is put in right here. If had we closed at like 75, then we only have 10 points to the next draw on liquidity, which would be that internal low. Now you could target at the external high at London high, but we actually enter long right here on this close. I get a great fill on in the Discord. And we're actually only targeting 25 points. So our strategy more is scalping versus actually having these 60-point TPs and these 40-point losses. We just look for the follow through on the inversion towards our next draw on liquidity. Now you could have taken this targeting this London high up here, and you could have kept the same stop, because as you see, let's go to the next candle. Okay, wait, we actually put in this gap right here. Now you wouldn't have had your stop right here at the beginning of this. If you were targeting that London high, you probably should have had it at the swing low, and then it's still, you have a negative RR at that point. So the way that we've been banging trades recently, we've only lost 3 times all year, is we're just targeting 25, 30 points. Depending on the day, we're targeting our 25, 30 points, and we're risking about 0.5 to 1% of every single one of our accounts. So I'm on a 50K account. I'm only risking 250 to 500 on this trade. You can enter with 5, 6, 7 micro contracts because our stop is so small and our TP is so tight. And this actually played perfectly because it was 25 points was also the high of day. So we didn't have to worry about the market rejecting off no liquidity. Now, what you do want to be careful of is you want to be looking at ES at this point, because had we created an SMT and ES come up and taken these highs before NQ did, then this trade wouldn't have been valid. So it's important to be looking at ES while also looking at NQ when framing your trade and actually taking your trade, because you can be in a textbook A++ trade, you get a couple points away from your draw on liquidity and it reverses to your break even. You're like, why did that happen? But I can tell you why it happened. You can go look at ES and see ES took the high or ES took the low, and that's why NQ started reversing back down to wherever you entered, or your stop loss if you didn't go BE. But that actually puts us at, let's see, how many wins are we on the year? So we haven't lost in February yet, and we only had 3 losses in all of January. And this is just our calendar for the Discord. We actually take every single one of our trades on live. So every single trade that you've seen on here has been called out live in the Discord. You watch me take it. I might upload a short of the actual live trade itself, but I mean, there's no one that's winning as much as we are, man. We are on a generational run right now. So if you guys do want to join the Discord, learn how to trade our model, and watch us live, just click the link in the description. It's free to join. But that is how we banked on my funded accounts today, man. This is it. I want to be doing daily trade recaps and some educational videos, so we're going to get those cranking out. So if you guys enjoyed, man, make sure to like, comment, and subscribe. Hopefully you learned something new, and I'll see you guys in the next one. Peace.